9 a.m. in Hong Kong, Beijing, and here in Singapore, you're watching the China Show coming to you live from the Bloomberg New Economy Forum that's now underway. I'm Yvonne with David Ingles.
Yep, over the next 2 hours or so, we'll be hearing from top corporate executives, world leaders, and policymakers over the next hours and days. We're here live in Singapore, as Yvonne is pointing out. Of course, lots to talk about today. The initial discussions have already begun, and it's pregnant, Yvonne, with possibility, given, of course, everything that's taking place. World leaders are here. It's a bit of a trek to get in, with all the security and everything, but it just underscores the gravity of the powers that be that have gathered here to talk about the things that really matter to business and investors.
And what a time, right? You're talking about less than a month before we had that talk in Busan between U.S. and China, where we do have this one-year trade truce. How have things been on the ground in terms of business and the like? And now that things are, some have said, maybe a bit fragile when it comes to this trade truce. You add on to a China and Japan spat now. Does that actually complex things a little bit here? And certainly there's going to be a lot to talk about in terms of how things have gone when it comes to the AI story too.
Yeah, all of those things, and I think the tilt when you look at the theme for this year's New Economy Forum is not so much the usual navigating the uncertainty.
Thriving.
It's thriving. How do we need to get used to this, and we need to be able to perform and outperform and deliver and thrive under these very extreme conditions, whether that's geopolitics, economics, and macroeconomics. Let's get it over straight now into the main hall where the panel is taking place, the Great Realignment. Let's take that in.
And we're basically following that trend. We're supporting our customers follow that trend. What's important here is to realize that there's been major shifts. So 20 years ago, you could summarize global trade by saying China manufactures, the US consumer buys, and that's global trade. Subsequently, China's been manufacturing for the world. What we're seeing more recently is Asia buys Asia. We're seeing China manufacture in the world as opposed to for the world. This Asia buys Asia trend has supported a lot of intra-Asia, the wider Asia, Middle East, supported a lot of trade within this region. It supported a lot of foreign direct investment in this region. It supported a lot of employment in this region. And the way we look at it is with more integration within this wider region, we will add 1.8% to GDP across the region. Now, the US tariffs will obviously hurt, but the estimate we have is that they will hurt around 0.5% GDP. So therefore, net-net, this region can benefit from greater integration within, for trade and for FDI. And, Francine, this is... these reconfigurations have been, happening throughout our history. We've been born 160 years ago here in Asia. We've been 148 years in Singapore. So I want to say, how do we help our customers? Muscle memory.
Muscle memory is always a good idea. Chowkat, how do you see actually the economy changing? What's driving it? Is it geopolitics? Is it AI? Is it everything in between? Or is it actually just labor dynamics?
Right. Well, it's everything, right? I mean, to be sure, these changes, I would say, have been accumulating for at least the last 5 to 10 years. The way we looked at it is that we looked at changes sort of at 3 levels, right? The first is cyclical. Those are the stuff that we have been dealing with, right? Business cycles. The second is what we would call structural. Things which you could kind of predict, for example, demographics. And then finally, in the last few years, what we are seeing is what we call foundational, right? I mean, the top 3 forces for foundational changes are AI, geopolitics, and climate change. So if you take those 3, for example, and then you think about the implications, there are a couple. Fragmentation is one of them, and that has great implication in terms of, how you should allocate capital. It also has implication in terms of the macro, right? Net, the cost of doing business is going higher. And the cost of defense and other things will probably cause a bit of inflation pressure. That's on the macro front. I think for businesses, there's also implication of incumbency versus startup, right? Especially with technology coming. So we are looking at that very, very closely as an investor, but also thinking about, how managers or operators can add value, right? So incumbency, take that as an example. has great advantages, especially in the AI age where you have data, you have customers already. Those are big advantages. Question is, can an incumbent adapt quickly? Right? And that, could decide whether you end up a winner or losers. But generally, because the spend is so big, right, as this world goes through all this adjustment, we do see, kind of what people might call a K-shaped divergence. The big looks like will get bigger, right? The tech, will have an advantage over the non-tech. So I think that's another kind of trend that, as capital allocator, we want to sort of make sure that we put money on the right side.
That's, again, always a good idea to put money on the right side. Like, how do you see this fragmentation? Do you have to choose between being either an ally of China or the US?
So the business we are in is renewable energy. We believe this is more foundational layer for different global localization. So, I always believe in the current geopolitical tension is coming from net zero, zero-sum game. But technology innovation is the way to improve productivity, to break through the zero-sum game, actually is to make the pie bigger rather than dividing pie. So that's why energy technology is most important. People start to realize now with AI development, the foundation is about energy. Again, so renewable energy even more fundamental because we are going to build a foundation on the unlimited, infinite renewable energy, which is supposed to be free. So, nowadays, the technology we are operating just make me kind of think about before industrialization. Every country, some countries have some coal, some countries have not. People are willing to buy steam engine, using steam engine to build their industrial foundation for developing textile and industry, whatever. So the renewable technology, today, the wind turbine is like steam engine back 200 years ago. So every country has the wind, solar, bring wind turbine, solar panel, energy storage. You create a modern energy system. Upon that, you can build your modern, localized manufacturing, supply chain. So that what I see is there's still a common ground on the foundational level.
I mean, the difference, I guess, with the steam engine period is this overlay of geopolitics. Is it difficult to navigate?
I think, as I said, if you actually get away from zero-sum game, so if you always think the inclusive development, collaborations, there are still huge rooms to be collaborative.
Jose, give me a sense of what this tumult means actually for Hyundai and your supply chains. So how much have they changed? And how much does it change? The idea of a great realignment is that at some point you reach the end point where it's fixed. Is that how we should see it, or is it ever evolving?
It's ever evolving. So this is a fundamental shift, right? So we are an international Korean company, and then a lot of the production takes place in Korea. And then because we are vertically integrated, we own our own suppliers, like Mobis, Globis, and others. And then it means that if you want to succeed in the new environment, for example, you cannot afford paying 25% tariffs or 15% tariffs and being competitive in the market. So you need to completely change that. How do you do that? You need to change your supply chain. You need to invest in the local markets, but you need to improve fundamentally your operation. So, for example, you need to have better quality, and you have to have higher productivity and lower costs. How do you do that? We utilize AI. We utilize robotics through Boston Dynamics. So we bring the latest and greatest technology to our plants. I'm very proud to say that we are the only OEM producing here in Singapore the Ioniq 5. in the state-of-the-art factory. It's almost an autonomous factory. So people are talking about autonomous driving. We are doing already the autonomous factory. And then the only thing that is not autonomous is the management, right? So we need real executives to manage the situation, to make the most out of it. But fundamentally, manufacturing becomes way more important because you cannot just rely on the old way of producing vehicles, increasing your costs. You cannot just pass the cost into the customer because otherwise you lose your business. So it's a fundamental realignment that requires a lot of speed. We call this in our company pali-pali. So this is our strength. We change very fast. And we try to apply also good planning, which we call midi-midi. So pali-pali, midi-midi, success factors to change very fast on a very strong plan. And how you do that, I said to my American colleagues, when you at the same time had to produce and sell cars. You go to the 405 in Los Angeles, everybody knows there are millions of cars passing there. They're always working, always transforming. So they can never shut down and say, hey, let's do this quickly. Now, we cannot do that either. So we need to maintain our investors happy. I think we're doing a decent job there, but it's a fundamental change. But again, looking in the mid to long term, it's all about investing, being more local. So you cannot anymore rely on, I'm a global company, I produce in Korea, I ship cars everywhere, and that's it. No, the solution for each market is a different one. And in our particular case, obviously, US very, very important. We cannot just simply abandon. But in a way, this could be an opportunity if, for example, some of the competitors cannot enter in that market. China, we see as an opportunity, right? So it's a large market that's growing. Things are changing also. We want to do better there. Europe, regulation is having a huge impact. But fundamentally, you know, things that we used to do once every 6 months, and then maybe once every 1 month during COVID, now is like every day. Hey, the regulation changed. What do you do? Okay, IRA is no longer there. What do you do? How about leasing? How about this? So it's a lot of very active, hands-on, proactive management to make the most out of this situation and take advantage. This is an opportunity for those who are better than others. Right?
It also sounds exhausting as a leader. Is it different leadership qualities that you need in 2025 to deal with all the changes?
Definitely, yes. I think we need to have people who are very connected, who are all the time talking to the shareholders, to the investors, but also to the end customer, to your dealers, to the politicians. So we are spending more time talking to politicians than in my previous life, yes. Right? Because things change so dramatically, and if you are late, then you lose, right? So it changes dramatically. But then we need to be in good shape. We need to sleep fast, as I say. So there's not so much opportunity to sleep in a day. And then always keep changing, keep adapting. And this is what is making our group one of the best performing groups nowadays under the leadership of Yusen Chang.
Georges, I mean, do you hear the same? Are you like a banker to exhausted CEOs that are just trying to, survive a little sleep to try and keep up with the news flow?
Yeah, everything Jose said, music, is basically the story of my life. So, it is absolutely true. I think what's important here is to see through certain of the short-term challenges. I mean, we have a resilient business. We've been growing in the number of areas. Even the areas most challenged, such as trade, has been growing quarter after quarter, steadily, robustly. We're here to support our customers. We're here to provide them working capital facilities where they need it, etc. And that's doing well. If I look at our share price, it's performed well. But if you look at the volatility of our share price, it's mostly been driven by speculation on what the taxation is going to be. So the underlying business and the resilience is here, but it's the short-term speculation, not even fact, speculation of what's the taxation on banks, specifically in the UK, that's driven most of the volatility in our shares. So you have to see through that. You can't let this wake you up at night. What should wake us up at night is what's the future going to hold? How are we able to transform with the technology disruption? Are we going to be on that journey, or are we going to be, if you want, left behind? And we can't afford the latter, right? So we need to be on that journey.
Do you see, Georges, a world where you could also have competing financial systems, actually, or splitting off in different networks? Is that a step too far?
So the short answer, Francine, is no. Now, there are some countries, some jurisdictions that have been excluded from the financial system for many for years, some for decades, and I can see a flag behind you. Those countries have been excluded for various geopolitical reasons, and they're not in the financial system. Everything else, we see it as a cohesive financial system. I want to give you some illustration, Francine. 60% of our largest customers, wholesale customers, in mainland China are US companies. And mind that these are not US companies who are looking to manufacture in China to sell back into the US. The vast majority of them are actually manufacturing in mainland China for the China domestic market or for the Asian market opportunities, right? Now, they are very successful. They're making very good revenues and very good profits from this business, and they're paying very large dividends back into the US for the US shareholders. So that is not going to go away. That is the reality of how this world is integrated and how the financial system is integrated. I can say exactly the same thing about India. Okay, I can say, Francine, you and I live in London, right? If you jump on an electric black cab, or you jump on an electric double-decker red bus, or if you're buying renewable energy in the UK, chances are you're buying Chinese, and that's the reality.
And that you're not expecting it to change.
I think the resilience of this underlying fabric is absolutely here to stay. What has changed is that there are certain assets which have now become or be deemed national security assets, such as code, Gen AI type code, such as chips, semiconductors, the most advanced ones of them, such as data and cloud. And those assets are going to fragment. Those assets are going to have national boundaries. Data has had national boundaries for some time. Data visas are required to move data around. Regulation has started to have lots of national boundaries, and there's going to be more highly strategic assets that will have national boundaries, and we as the financial system, but also all our customers, will have to respect that and ensure that we're protecting the national considerations for these. But you step out of these assets, and there is a multitude, there is a huge ocean of opportunities where business is still conducted on a cross-border basis, and business will continue to be conducted on a cross-border basis, and we believe that's going to be the case.
Jacques, where are we actually in this global realignment? Are we 60% there? Are we 70% there? Or is it ever evolving? And again, was it accelerated by the Trump administration, or was it a sea change?
Right. I guess under this theme of realignment, there are several threads, right? You have, I think what we have seen so far has been on the security side, on the trade side, on the supply chain side. I think finance, is the one that I'm worried about, right? Because I think for other parts, there are some very difficult issues. Let's say on trade, with the tariff and all this adjustment, it's not really the fundamental. Right? Because the fundamental has to come down to investment savings imbalances across countries. It's a very difficult rewiring of that. Essentially, I think the Chinese need to increase their consumption, the Americans need to reduce the consumption. But that's a very difficult sort of balance to achieve. Trade, in a way, is a symptom of that. Right? So that is happening, but maybe just, frankly, at the surface. Supply chain rewiring is very expensive, right? Because we already have had this kind of global arrangement for so many years. Many of the parts are already in place for decades. To try and shift that is going to be very costly, and actually is very risky, right? Because a disruption in one part can send, shockwave into the whole chain. We have seen it, in fact, right? Quite a few examples. But I'm hoping that on the finance side, we don't get there. That there's enough wisdom that a big part of that global financial system, in a way, is global good, right? It's public good, right? So be very careful in rewiring that. I was just talking to an institution that is involved in that whole kind of plumbing system, and they are in a certain jurisdiction, and of course, because of that, they are subject to the law of the land. And if the country imposes, for example, sanction on another country, they have to comply, right? But actually, at that institution, if you look at their function, which is really global public good, I was joking with them that they should be subject to UN Security Council's jurisdiction. There's enough veto, right, to make sure that they are not having to act in a certain way. Because once you touch that financial plumbing, I think there will be a lot of unintended consequences, and the cost will be significantly higher than what we have seen on the trade side.
But do you worry? Therefore, I mean, what do you worry exactly about? Is it like unpredictable inflation, or some
just
data point, or something
weaponization,
systemic?
Right? Weaponization of financial instruments.
Of financial systems.
Right.
Do you see decoupling in the world, like real decoupling?
I think there are a lot of temptation to do that.
Yeah.
But so far, I'm quite encouraged that the people in charge, I think, have the wisdom to recognize that it might backfire.
Jose, can you update us on what happened at the Georgia battery plant in the U.S.? So there was a raid, and you said that will set you back 2-3 months.
Right. So that was a bad surprise. And then the number one surprise was that I received a phone call, and then what happened? And then it was not our plant, but it was portrayed as if it was our plant. It was an LG plant, and then we are shareholders, but it's a separate plant from the assembly plant. Well, I think there was a kind of independent activity from either the federal government and the state government. I got phone call from the White House apologizing for what happened. They were not aware, they didn't know, so why this is happening when the company, as part of the South Korea tariff negotiation, is really making big commitments to invest in the country. As I mentioned earlier, $26 billion in the next 4 years versus $20.5 billion in the last 40 years, which is the time we've operated in the U.S. That was a kind of a big surprise. The governor of Georgia, Governor Kemp, also called me and said, I don't know what happened. This is not a state jurisdiction. So apparently somebody made a phone call and made it look like there were illegal immigrants. That's absolutely not the case. And in fact, President Trump didn't want those workers to get back to Korea. The fact is, there are a number of jobs that require to be specialized, and in particular in the battery business, and a number of processes and technologies that are not available in a very well-developed country like the United States. And then you need to bring specialized people to do it. The system, the immigration system, does not recognize that. So I think if we want to be positive, I always try to apply the PMA attitude, positive mental attitude, right? So the good thing is that as a result, we've had a lot of discussions with the federal government, with the state, with the immigration authorities, both in Korea and in the United States. And now we're finding very good permanent solutions, not only for our suppliers like LG, but for our own people. We have thousands of people who come and help us to establish the operation, and then they go back to Korea. And I think for others as well. We're coordinating much better among all the companies that are impacted. And I think at the same time...
And it hasn't dented actually your commitment to the U.S. in the slightest?
Not at all. Not at all. I mean, we need to look at the things in the long term. This happened right 1 week before we were having the very first CEO Investor Day outside of Korea in the history of the company. And it was me, the first non-Korean CEO, making the presentation in New York. And they asked me, are you going to change your plans? Oh, no, we are not here for the short term. We've been in this country for many years. This is the #1 market, is where we make the most. We cannot just simply, because something happened, which is obviously an accident, and then you get even apologies from the President of the United States just saying that this is going to change our plan. No, on the contrary, I said we double down. We want to maintain our investment in the country. We think that in the mid to long term, things are going to get better, but obviously we need to make also a lot of adjustments to the supply chain, to the products that we're going to produce. But ultimately, it's all about having good products in the market, being very competitive, high quality, top safety, durability, reliability, to be competitive in the marketplace. If you don't get back to your fundamentals and you change your strategy when you have an event, then things are going to change. So, for example, by the end of September, IRA finished. Right, and then the OEMs and the consumers were getting benefit of $7,500 if you bought an electric vehicle. Well, we see what happens in China, we see what happens in Europe, and even in the United States. In many states, you know, the EV is a better solution for the consumer. So we have maintained our plan. We not only maintain the Savannah plant investment, which is about $12.6 billion and more than 8,500 people, but we have announced an expansion. But then what we're doing with this expansion, instead of doing all electric vehicles, we're going to produce also hybrid, EREV, extended range EV, and fuel cell EV, etc. So flexibility, adaptability, being very fast to be able to capitalize on the new situation. So I remember we were announcing the new factory, the grand opening in March, the Liberation Day, when the president announced the tariffs.
Perfect timing.
Yeah, perfect timing. So they were asking me, wow, you're such a visionary, right? So you knew this was happening, and then you are localizing. I said, yes, exactly. So the things don't work this way, right? So you need to have a plan, stick to your plan, adapt it, be very fast, and always look at the different players to maintain a good performance to your shareholders and ultimately to delight your customers. We call it Sonnim, which is the honor guest concept in Korea.
So just a reminder, we have 10 minutes left, and I'm still waiting for questions. So feel free, otherwise I have a million more questions. Lei, when you look at what you were talking about, renewables, but also AI, I mean, in this new, ever-changing, ever-evolving world, who will be the winners and losers? And actually, how much disruption are you expecting in your own company in 5 years?
Right. So, in Vision, we not consider ourselves as an energy company. We also position ourselves as an AI company. We are applying, physical AI in particular, which is more than a large language model. We're going to put these physical laws in the AI models to harness the energy system. For instance, today we are making our green hydrogen as cost competitive as gray today already. Is 1.5 million ton green ammonia facility has been built up. So the first phase, 300,000 ton, but reached the cost parity. Why? How can we change to manage that? We put this wind solar storage in the Gobi Desert of Inner Mongolia. The only resources we are used is wind and sunshine and the wastewater from the city. There are three elements. Then we create green hydrogen and green ammonia. So how can we achieve that? AI is playing a very important role. Firstly, we're building AI climate foundation model, which makes us to look through the weather pattern, which is supposed to supercomputing to figure out the weather happening. If beyond 7 days, no clue. But we are able to have improved 50% accuracy for weather forecasting. Then we are able to adjusting all the renewable production. Secondly, because the system is so complete, it's the largest independent renewable energy system in the world. So have so many devices, human coordination is almost impossible. We're using AI, of course, with a physical boundary to manage such an electrical and a chemical facility. So then we are able to use 100% renewable energy, which we are, because the green hydrogen costs 80% coming from electricity. We have such a low cost electricity, then we're making green hydrogen cost competitive. So we already feel this is the impact of AI, but we're also using that project as a training base for energy foundation model, because it's an independent system end to end. It's so complicated. We are training our model every day. So then it's become much more efficient.
Thank you. So we only have a couple of minutes left. So I'll ask you, almost like quick fire, rapid questions. Chauket, we have a question. Now the Q&A questions are coming in. I have many. How do you think about de-dollarization and implications for emerging alternatives to the dollar? Is it stablecoin? Is it digital baskets? And I guess this goes back to my underlying questions, which is winners and losers over the next decade.
Yeah, I mean, this question has been, talked about quite a lot, right? I guess different definition to this de-dollarization. One version is that will the U.S. lose its reserve currency status? That seems like a remote possibility, right? Unless, I guess, the foundation, right, of the U.S. system cracks. We don't really see that. Right. There are some challenges with regard to, debt and fiscal position. Growth is very important. It does seem like a lot of things are riding on AI, right, to get growth. There's a lot of reliance on AI delivering productivity. So if that doesn't happen, you might get a bit of a hairline crack, to some of this. But we don't see that. There aren't clear alternatives. I mean, I would say in the currency market, investors sort of adjusting their currency exposure is quite a normal thing, right? If you have, let's say, a very high exposure to a particular currency or country, adjusting it down 10% is not unusual. And the good thing is that financial market today allows for this kind of adjustment. So I would say that there are enough levers for investors and other participants to adjust the position without causing a big problem.
Georges?
Firstly, I agree with Chauket. Just to give you some numbers, 50% of global payments are done in dollars. 60% of global reserves are US dollar based. 80% of trade is financed in dollars, and more than 95% of foreign exchange is done against dollar. So that will erode, but that's not going to change the landscape. The dollar remains the major currency, right? That it will erode because there will be diversification, there will be usage of other currencies, there will be more and more usage of gold in reserve management, but it's not going to materially change the picture, certainly not in my career, probably not in my lifetime. This being said, payment trails, and this is kind of going back to what Lei was saying, payment trails will evolve. I mean, we are still on payment trails that have been invented many decades ago, and they're become much more efficient, of course, over the many decades. But the fact that we need a refresh, 24/7, instantaneous, frictionless payment capabilities, which could be provided, among other, by blockchain technology, is definitely a likely outcome of diversification of payment trails. And it's very important that we work on them, we test them, we make them more and more resilient, we make them bank-grade standard, financial services grade standard. But that evolution is much more real than if you want a de-dollarization.
Jose, when you look at winners and losers, I know that you have a very clear advantage, certainly because of when you look at Elon Musk's focus on robots and humanoid robots. You're like decades ahead. But given the fast pace of advance, be it driverless cars, of robotics, I mean, is that enough? A couple of decades? Advancing?
Is never enough. And in fact, whilst our company is, I would argue, one of the most advanced, I think we're a technology company who happens to be in the automotive business, right? Because we produce chips, we have robots with Boston Dynamics, we do logistics with Globis, we have our own bank and the capital. Our autonomous driving company, Motional, for example. But that's never enough. So as an example, we thought that strategically it would be good for us to have a strong partnership with the best domestic company, for example, in the US. So we made a partnership with General Motors, right, to co-produce, to co-develop, and to achieve synergies in terms of localization. When Hyundai plus Kia plus Genesis are the third largest OEM in volume, the second in profits, but we still think we could have more synergy. So we partnered with the GM, we made a partnership with Waymo, for example, for robotaxis, or with Amazon for online sales, and many others, right? So we think that AI, robotics, autonomous driving, all this is here today. We have the technology today, and it's more a matter of regulation. So therefore, we need to look for the next frontiers and continue to adapt. Again, the fundamentals is the most important. How do you take advantage of this? And then to your earlier point, CK, so I think very, very important to avoid having a transformation where you lose business is how you transform when you grow. So we presented a plan to grow 35% volume by 2030, 55% on Genesis, which is double-digit profit. So you have to think forward, breakthrough, to be able to navigate winning instead of thinking you're going to lose. So you either grow or go. So you have to be careful.
Gentlemen, thank you so much for a spirited conversation. Thank you so much.
Thank you.
All right, there you go. A fantastic panel there. The Great Realignment is what it's called, and really heard from the likes of HSBC's George El-Hedri. You had Jose Munoz from Hyundai really talking about the change in dynamics when it comes to, of course, how you look at U.S.-China relations, and really when it comes to this whole concern of decoupling. When it comes to the financial system, I think they said, it is still intact, according to HSBC. That, what I thought was interesting is that what does get different and what changes is the amount of assets that have become nationalized. Yeah. When you look at gold, when you look at chips and AI and the like. So certainly that's going to be a key focus here throughout the shows too.
I mean, it's a really fantastic way to kick things off. Yeah. Just being able to define concepts, thriving in the age of extremes and the Great Realignment, right? Yeah. So what is changing?
And what's not.
And what isn't. Yeah. What isn't, right? Let's not spend time on things that are not shifting as much as to be consequential to things. The de-dollarization is going to be interesting. That's another theme to be, we'll continue to watch it as well. But yes, I think one thing that stood out is really national security. Yeah. Like that is something that we need to be used to, and that we'll just have to wait and see how we just muddle our way through this. And of course, coming up next, and as things reorganize inside here, inside the Great Hall right beside us, of course, Tom Orlick is coming on very, very soon. For our Bloomberg subscribers, you can tune into your terminal for what's going on there. TLI Vigo, of course, is the function you run. A lot of great commentary and context on everything else that was mentioned there. Some size, scope, and certainly more important context on everything, including also the underlying data that does manifest in the form of the changes taking place, these paradigm shifts taking place. But yeah, so we will leave that there for now and revisit things once, of course, things get underway again in sight.
Let's get a little bit more take on what these markets are looking like. Of course, we're seeing another day of selling here and risk assets being sort of bearing the brunt of it. Joining us now from Chicago is Vivian Thurston, partner and portfolio manager at William Blair. Vivian, thanks for staying up with us. And certainly, this is coming at a time when we are seeing a lot of questions around the whole AI story and what the Fed's going to do. What do you think is really kind of driving this de-risking across markets now globally?
Yeah, I think the number one driver is about the Fed decision. As we know that as the prospect of the rate cuts in the U.S. start to come down, you tend to be a negative backdrop for emerging markets or the risk assets. First of all, the US dollar could stay firm for longer, and that means not a good news for emerging markets currency. And more importantly, I think it will be global investors' cost of capital will potentially stay high for longer, and that will reduce their appetite to invest foreign equities. So Chinese equities will be one example of that. So I think a lot of that is driven by this expectation.
Vivian, David here, maybe just to build on that thought, what have you done recently as far as your different exposures are concerned? Have you been actively adjusting? Have you been writing this one out until we get more clarity? Just give us a sense of what's kept you busy the last couple of weeks.
Yeah, and to a large extent that we have seen a lot of appreciation of the holdings we have. I think that's along with the market. As you kind of see that MSCI China year-to-date appreciated about 34% and actually outperformed both emerging markets equities and also S&P 500. So that's part of the also action we've seen across the board. There's a profit taking going on. So from our perspective, we also start to take some profit especially for those stories start to play out more than we expected. But in the same time, we also continue to hold on to those companies with the innovation kind of drive going forward, which we believe will continue to support earnings upgrade going into 2026. So I think we definitely treat different ideas, companies differently, and then definitely hold very much a bottom-up kind of approach looking at this.
Yeah, I mean, you mentioned the outperformance we've seen in Chinese equities this year. I mean, we're set to overtake even the likes of the U.S. for 2025. What does 2026 look like? Can we sort of have the same sort of returns next year versus this year? Or, is this year sort of the best that we can get?
Yeah. So I tend to look at two different factors. It's very hard to predict the market movement, and that's for sure. But I think there are some aspect we can kind of outline here. Number one, about earnings. So basically, if you look at equity market, it's earnings and multiples, right? So earnings, if I look at Chinese companies, and the forward looking, I think in 2026 on the broader base, I think the estimate is about 10% plus kind of earnings growth. And that's a broad-based, which is higher than this year estimates about high single digits. And part of that is both the innovation-driven industry going to continue to see earnings upgrade. So for the technology-driven or internet-driven kind of industries and companies, we've seen that earnings growth being double digits even in 2025, and it could be even higher, approach to 20% in 2026. So that's, I think, it's a pretty positive kind of aspect. And then outside of those more growthy, technology-driven industries, I would expect certain recovery, given that 2025 remained a pretty weak year for the broad-based economy of China. So we see broad-based corporate fundamentals still remain in this kind of weak spot. So if those companies start to recover, that will also support the broader Chinese kind of equity market in terms of the earnings revision. And then in terms of multiples, I think it is a little bit challenging to predict. If without the U.S. Fed interest rate policy impact and also continue ongoing U.S.-China trade relations, I do think that Chinese equity could see, if not higher multiples, but continue to stay at this level, given that if you look at MSCI China, forward PE is only about 12 times. So if you think about on the PEG perspective, still very attractive versus S&P 500 trading nearly 22 times forward PE with earnings probably grow mid-teens. So without the non-fundamental factors, I do think 2026 could still be a good year for Chinese equities. Right? But then the unknown comes from the policies, the U.S. interest rate policy, and then the related also AI spending on the global level. So that I think also remain unknown, especially that will have impact on the fundamental side for the Chinese companies as well.
Vivian, you alluded to what's done well and what could do well next year if the economy, the rest of the economy, let me rephrase that, is that a hope or is that an expectation of yours? And does that cause a rotation out of the big winners this year, or do you get a broad-based rally? What's your suspicion?
Yes. So I think from a mathematical perspective, base effect will get easier, meaning that, that part of the economy, whether it's consumer, whether it's property market, whether it's some fixed asset investment, has been very weak for actually multiple years already. So I think as base effect gets easier, and that's how normally the cyclical industry tend to recover, or the cyclical downturn start to stabilize and become a potential uptrend. So that's one kind of analysis from mathematical perspective. Having said that, we've been on this kind of a pretty weak pattern for some period of time. So there's a possibility 2020 to become the same year in terms of the continued deflation. But I would say the odds is on a recovery front, given every year goes by, the base effect gets a little bit better and easier. So if any, I think that's one hope plus analysis-driven kind of expectation. And the other thing I think we've been talking about Chinese policy so far being kind of lacking. So we don't know whether 2026, if they were able to come up with something maybe more meaningful. Yeah. Not large amount, but something marginal, and that will still help.
Well, if you put it that way, we can't argue with the way math works and the base effects. Vivian, thank you so much for taking the time. We'll speak to you next year. We'll see what happens. Vivian Lynn Thurston, the partner and portfolio manager at William Blair. Right, we're going to take a short break. On the other side of it, we'll be having a conversation more, of course, coming to you live from the Bloomberg New Economy Forum taking place here in the Lion City. And Byron Pei will be joining us, the heads of HSBC-backed fintech platform Dowsure, joining us for a conversation next, what they're up to, funding plans, and everything in between. This is The China Show. Good morning.
Start thinking for themselves, and temperatures continue to rise. Changes not seen in 100 years might not be the half of it. We've got a lot to talk about.
All right, that's Bloomberg Economics' Tom Orlik there on stage, and certainly talking about what the state of the global economy is going to look like here for 2026. You know, it's thriving in the age of extremes, of course, is the theme of the New Economy Forum here in Singapore this year. And certainly we've been talking about this kind of realignment, right, of really at a time when America is chasing for these America First policies. Is it at risk of alienating this part of the world? But what we're seeing is that, you see China, India, Southeast Asia all finding ways to collaborate too, and as they try to find more of a neutral stance too as well. Yeah,
I mean, the timing of this is, could not have been better, following just about a month, of course, after your coverage and when you guys went to Korea, of course. But then just soon after that, and let me just complicate the math even further, while what's taking place between the two have really driven many parties together, we're suddenly dealing with a Chinese-Japanese tension that's taking place right now. Yeah, and that certainly is the big thing to watch, given that we're still seeing that the Japanese, or at least the Prime Minister Takaichi, hasn't retracted her comments to what Beijing has demanded in some ways when you listen to the rhetoric. And our Tara Kamura from BE had a very interesting sort of talk about this, about there is no incentive for her to do so, given the fact that she campaigned on a very nationalistic campaign. And so there you go. That's one to watch, right? Does this whole sort of China-Japan spat affect in any way the U.S. and China trade truce, right? If we see continued flare-ups here, if China, for example, retaliates in some ways, and some people have talked about, the targeting of critical minerals once again, right? If they start to use that trade weapon once again, does it sort of lead the U.S. to get involved in some ways? We have a great panel of guests, right? We've been firing up all the guests that are speaking here at the New Economy Forum that are going to be talking about these very issues. Everything from John Waldron, we talked about there. We have, of course, we've been talking to APCO, the chairman, James McGregor, has been joining us there at the top of the hour to talk about his trip to China, right? He just returned after a month-long trip there. And we'll talk a little more, of course, about cross-border e-commerce with Dowsure coming up. Plenty more ahead. This is Bloomberg. Right, welcome back. You're watching The China Show. We are live, of course, here at the New Economy Forum taking place in Singapore, and we're focused in on really the fintech sector at this point in time. In which way are people doing business, small businesses, all the way up in scale? We're joined here in set by Shenzhen-based Dowsure. Of course, they provide, of course, cross-border financing services, Greater China, Southeast Asia. They're in the middle of a funding round. They're growing by 2-3x. So fantastic to be here, joined in set here by Byron Pei, of course, the founder and the CEO. Good morning.
Morning.
How's business been this year?
Yeah, it's fantastic. Yeah, this year we have reached 100% growth. Okay. And during the past 5 years, 2.5x CAGR. Yeah, it's pretty good.
How, if any, have trade tensions between the U.S. and China impacted your business in any way? I mean, obviously, we're in a one-year truce now between U.S. and China. Have things picked up in the last few weeks? What can you tell us from what your merchants are saying?
Yeah, so the U.S.-China relation is very important for cross-border e-commerce. But, e-commerce is quite flexible. So the merchant, they are using all the kind of approaches to hedge the risk. But fortunately, in the next year, the tensions will be eased. So everybody was very excited to do more business on cross-border e-commerce. Yeah.
Since maybe just to build on Yvonne's question on, it affects how e-commerce flows, in the direction of flows and the magnitude of the flows. Have you seen any pickup recently because of that meeting between President Xi and President Trump, and things, to your point, going into next year seem to be on a smoother foundation going into next? Have you seen anything pick up in the last few weeks or so as far as flows?
Yeah, I see, it's going to be the peak season. So every merchant, they're preparing inventories, they're doing marketing campaigns. They want to seize the opportunity. Yeah. So just as the merchants are quite flexible, they are not only focusing on the China-US corridor, but they also seek opportunity to sell to the Europe, Southeast Asia, and also they want to, decentralize their, business to all over the world. So we can see a lot of Chinese outbound merchants setting up entities in Southeast Asia, starting from Hong Kong, and even some of them are investing in the U.S. to become maybe U.S.-made brands.
Okay.
Yeah. So I think that's a quite flexible model. Yeah.
So you still see Chinese companies willing to expand in the U.S.
Yes.
Even with these trade tensions. Okay.
Yeah.
And how does that affect your planning? Are you following, because a lot of what you do is following these clients around? What are your expansion plans? Is it Southeast Asia? Is that your next big growth area?
Yes. We partner with the e-commerce marketplace giants like Amazon, Walmart, eBay, Shopee, to help them to build and improve the seller lending program to help the merchants on their platforms to grow. So wherever the merchant goes, we will accompany with them and to help them to have a localized financial services. On the other hand, we partner with the local banks, just like HSBC, which is also our strategic investor.
Yeah.
So on every market, we help the local banks to connect with the marketplace to provide the merchants with affordable, accessible, and instant credit to help them to grow.
Tell us a bit more about the financing side of things. You just completed a Series C round. What are sort of the fundraising that you're looking at now? And do you need to raise more money?
Yeah, it's quite challenging, considering the fintech issues, the political issues. So we're lucky to have HSBC as our leading investor in our Series C. Now we're seeking, following round. The potential investors includes international banks, strategic partners, and as well as global VCs.
When do you plan to close this ongoing round? And do you have a target in mind? How much do you want to raise, and how much do you need to raise? Those might be two different figures.
Yeah, so we need to expand to follow our merchants globally. So we want to raise $30 to $50 million to help us do the expansion. So we are hoping to close this round in 3 to 6 months.
Okay.
Yeah, hopefully.
In terms of just this, can you tell them more about this fast payment that you're seeing, this innovative merchant fast payment service that you're about to launch next month? How does it work?
Yeah, so it's a quite important, finance tool for merchants. So we will co-launch that product together with Amazon, which is our strategic partners. So that feature will enhance our customer experience. It will automate the repayment for the merchants, which will accelerate their business turnover days from 90 days to 76 days, which means a 16% increase for their efficiency. That will help the merchant to drive more profits in order to provide, competitive prices for the end users.
Yeah.
So next year we hope to covering 50,000 sellers, and we'll,
How many are you doing now?
We are now have served 50,000 sellers across Asia.
Okay.
Yeah. During the past 4 years, together with our partners, we have dispatched $1.5 billion to over 15,000 sellers.
And as you plan not just the business, but the service and the product. What are some of the big or the major enhancements to the offering that you foresee that you need to put in place over the next few years?
Yeah, I think AI matters because now we are building our proprietary LLM to train the model to understand the e-commerce language and to help the banks to understand more in order to prove, better rates, better credit limits, and the customer experience. So we are helping many banks to do that.
Right.
So now on our platform,
do you have your own LLM or are you using somebody else?
we're using somebody else.
Okay.
Yes.
Okay.
We are working on that.
Interesting.
And then we're looking out for an IPO soon, right, Byron? What are we
We
talking
have a
about?
3-year plan.
3-year plan?
For IPO. Yeah.
Okay.
Yeah. I'm a silver entrepreneur. I already, have my first company listed back to 2016.
Yeah. Right.
So this time I want to be a much larger volume scale for IPO.
Okay.
Big ambitions.
Yeah. Byron, it's great to have you. Byron Pei there,
Thanks, Byron.
CEO and founder of Dowsure, which in Chinese means 豆沙包, if you know.
Yeah.
Red bean baos, yeah. We're going to have plenty
Speaking
more
of,
coming up.
I
Live from
think there's a
Bloomberg
few
New
here.
Economy Forum.
Yeah.
All morning, of course, we talk about just the long list of guests that will be joining us here. APCO Worldwide's Greater China Chairman, Mr. McGregor, is going to be joining us here, talking about the business environment in the next hour. Here, really, and for a look at what else is coming up on our shows, right? We got a panel. We're going to talk about DigitalBridge there. They're kind of the alternative asset manager that looks at, of course, investing in the whole digital infrastructure space. But we'll have a lot more, of course, the next few hours here from the Bloomberg New Economy Forum there, like Fonterra, Nubank, LSEG, Hyundai Motors, Jose Munoz, who's going to be just finishing up his panel, of course, and coming here on TV later on.
Okay, yeah, we will take you straight now inside. So that's a preview of what is coming up, what is going on at the present. Straight inside, of course, is I believe our colleague Sherry An is leading the current panel. Let's listen in, shall we?
For example, as a first, and we had our first workshop in June, and now we had our first ministerial declaration, and guess what, on supply chain security. So these are exactly the topics that we have decided that smaller and medium-sized economies would like to work together.
Prudence, how do developing economies fit into this broader context?
First of all, we have to understand that the multilateral trading system is now more unpredictable than ever before. And one of the strategies that small countries like Rwanda has to adopt is to diversify our markets. We are talking about South-South cooperation. FITP is one good model of South-South cooperation because we have traditionally relied on European and US market for so long because of AGOA. We have been a beneficiary of AGOA with the US market. We have been beneficiary of the GSP with EU. But all these trade schemes are getting to an end. So now we have to invest more in diversifying our market. We have to invest more in looking for new opportunities for investment and also for our export market.
Is it tricky to sort of set yourself in one camp when you have the two largest superpowers in the world competing?
Yeah, but for me, when you have the two superpowers in this game, I see it as an opportunity. Why? Because we have seen recently some investment relocating. If, for example, a Chinese company that used to access US market is unable to do so because producing from China doesn't give them access to the US market, then they will find it appropriate to move to a country like Rwanda, where regulatory environment is conducive, where we are enjoying actually the baseline tariff with the US, which is just 10%, the lowest of all the tariff that the US has set for countries.
David, you are diversifying your manufacturing already.
Yes.
Yes, that's one of the approach we take. Historically, our volume is mostly in China because of the China EV. And now what we see is that I half-jokingly tell people it's a China ping pong team, meaning that we're fighting each other so hard domestically. The truth is that when you go out of the border, you realize that you're so much more competitive because of your domestic industry, because China EV is leading. So what we find is that global customers, they come to us. They're like, it's crazy you guys can do such a high-quality part at such a price. And do you lose money? We're like, we're getting by. So they're like, okay, how about you set up factories and set up supply chains outside China so that you can better work with my volumes in the rest of the world? And because we have that super capability to control the cost, crank up the volume, we get to do that. Of course, this increased the cost. But in the end, if you compare what we have to what my US or European competitors have, it's still a very different game. So the customers are very happily taking that part.
How big of an impact is not only the technical side of your business, but reputational when you have the Pentagon blacklisting your company?
This is a history I'm sure not any people know. We were on one of the list, and we fought really hard, and we actually sued the U.S. government, the DoD, and actually the judge came out saying that we really didn't find direct evidence, and which means that the only consequence for me is I couldn't supply to the U.S. military, which I didn't even do. But the problem is that with that restriction, people will look at me, they think, oh, what have you done wrong? Why did you piss off the most powerful country in the world? Like, the truth is, we're just trying to do civilian parts. But then people think we have reputation damage. And that's actually true. We have to explain, look, you need to look at the evidence. And that was the part that was definitely not helping my business. But thank God that people are still looking at the facts, still looking at what's really can be verified. And that's over the time, it's been a year and a half. I think it's people start to understand the situation.
The U.S. merit, for example, has been unhappy with the global trading system, with the multilateral framework for a very long time. This actually goes beyond just Trump 2.0.
Oh, absolutely. I think, disappointment with the multilateral system has started very soon after the WTO was formed and China joined, and so I think the point was made earlier that it's been years of frustration with the inability of countries to come together to negotiate and modernize rules and frameworks, among 168 plus countries by consensus. It's just not working. But that doesn't mean that trade isn't expanding. The rule frameworks have just not been multilaterally, and things are moving a little bit more regionally and bilaterally in terms of frameworks. And now some of them are softer than they used to be. They used to be hard law. Now they're softer. They're more recognition agreements and so forth. But I do think it's important to look at where trade flows are continuing to be vibrant and growing as against hard law frameworks.
All right, trades, new realities. That is the panel that is underway here with our very own Sherry Ann, of course, moderating that with the likes. We're talking about Columbia Universities, Jared Marajano there, Hosai, of course, David Lee, talking a little bit more about how he's open to production outside of China as well, just given the geopolitical uncertainties out there here. So certainly quite interesting, right? We continue to talk about the reality that we are under this one-year truce between U.S. and China.
What changed, what is likely to change, and what is not likely to change.
Yeah.
And I think one of the takeaways from the panel right before that, before Tom Orlik, was in fact the Great Realignment, and really an interesting delineation where when you look at assets, right, chips, AI, gold, those things are being drawn between lines of national security. So that's something that we need to get used to. Yeah. But as far as cross-border business transactions is concerned, I think HSBC had a very good statistic, right? 60% of their largest clients, 60% are U.S. companies doing business in China. Yeah. That's not changing. In fact, that business is deepening even further. Joining us here on set to talk us through really the key themes and what to watch moving forward. Stephanie Flanders, of course, our head of economics and government, is here with us from set. Very nice to see you. Good morning.
Great to be here.
It's an annual tradition.
It is.
Vivian Balakrishnan, of course, you had a conversation with him earlier. And what was the initial tone that you got out of that conversation?
You know, I think I actually wanted to start the conversation with a positive, with a sort of bad thing that we thought might well have happened this year, especially in response to President Trump's decision to really go further with tariffs on all of his trading partners than people had expected. I think if we'd sort of fleshed out that scenario a year ago, we would have said, yeah, and all the rest of the world will retaliate and we'll end up in potentially a kind of 1930s style tit-for-tat trade war. That just hasn't happened. You know, as a group, China's an exception, but almost all of the US trade allies have actually said, you know what, we're just going to pay this higher price for access to the US market. We don't think it's benefits to the US. It certainly won't benefit us if we start getting into a war. So we're just going to deal with. We're going to take that. We're going to do these sort of asymmetric, sort of unfair trade deals with the US, and try and increase trade and integrate more amongst ourselves. And Singapore's obviously been part of that. And I think, you know, he was also engaging with that theme, the idea that, you know, the US has been a very important player, has been the sort of rule maker and overseer of the system. It's withdrawn from that role, but the rest of the world can still carry on, wants to carry on trading.
China then, I mean, has been the one that has bucked that trend and really held out in this whole trade war, right? And in some ways it seems like they got what they want. They wanted in all of this, too.
This is what I was interested. So the minister had obviously been at the ASEAN meetings and also in Malaysia and in Korea, had seen that, what he described as the tactical pause between the US and China. But you're absolutely right. And I think if many of the Southeast Asian nations around the table at those sessions could see that not only was there an agreement between the US and China, but China was ending up relatively in a stronger position with lower trade barriers with regards to the US than many of the people around the room and many of the countries that were hoping to be an alternative, a China plus one. Yeah. I think that for me is a kind of new trade reality. I was interested to hear from the minister whether he thought that was a permanent situation, that the US was actually no longer trying to wean itself off Chinese goods, because everybody else was also facing the same kind of barriers. I think we still don't have an answer to that.
And the question around what now? In other words, what does the rest of the room outside the U.S., how do they now engage with this U.S. economy 12 months into, of course, Donald Trump's second term?
Well, so I do think there have been these moves to have more trade amongst themselves, but actually we have still continued to see trade going into, you know, we've obviously still seen imports into the US.
That's right.
Part of it was the sort of front-running of the tariffs. There's also key areas like pharmaceuticals, electronics, where we would have, the expectation was, the nervousness was that there were going to be high trade barriers. And of course, that's where the big exclusions have come. So I think when you talk to US companies, and you mentioned that, we also had a great story the other day from Jenny Leonard in Germany, talking about German companies not being in denial. They understand that they probably should be less dependent on Chinese production and sales to China, but they're just unable, they're just deciding they just can't do it. It's just too important for them. So I think that's another thing that people are doing. They're taking the opportunity created by the confusion, if you like, of the sort of freewheeling approach of the administration. OK, we don't have to choose between the US and China, because even the US is not choosing between the US and China.
That's a good point.
I think there's a good point you asked Balakrishnan, too, about China exporting out to the rest of the world, and that, you know, they're really singling out Europe, right? If you're going to outsource your manufacturing to China, if you're going to outsource your energy to Russia, if you're going to outsource your security to the U.S., it's just unsustainable that they need to come to grips with that.
But he didn't spell out, I mean, it's funny, he was quite clear about the problem of overcapacity, and that the Chinese export-led focus had been a source of instability, was not sustainable long-term. Yeah. But he was not willing to, I mean, I was pressing him. I said, you know, he's a diplomat, obviously. But I was saying, you know, that is what China's doing. We've seen China double down on that. China's one of the few countries in the world that's managed to grow its exports this year, despite the fall in exports to the US. And he left that question unanswered. How are you going to fix that the source of imbalance that's still coming from China.
Stephanie, it's great to have you here in the region. Stephanie Flanders, there, head of economics and government at Bloomberg. We're going to do a market check here right now, right? I believe we're still seeing a bit of pressure here when it comes to risk assets here today. Let's get Min Min there, who is watching everything for us in Hong Kong. Hey, Min Min.
Hey, Yvonne. Yes, we are seeing the Asia-Pacific stock index looking pretty firm at the moment, up 0.2%. Things have stabilized over the last 1.5 hours or so. You can see the Nikkei and the Kospi both flipping from the red to the green right now. The Nikkei is up 0.6%. We did have the sell-off overnight in the Mag 7, right? There has been an increasing number of investors warning of the sustainability of that AI spending as we look ahead to Nvidia's earnings, but things are at least taking a pause right now in the Asia session. The 10-year yield also now pointing higher, holding on to the 4.11% level. The yen continuing to push higher at 155 levels. But yes, we are looking ahead to that jobs report tomorrow and what that means for the Fed cut possibility in December. But we flip the board and take a look at some of the earnings story that we are digesting overnight. We had Baidu reporting earnings, actually showing the worst revenue growth on record, but it was still ahead of expectations, not as bad as expected. The big decline was in its core search engine ad revenue, but I think the surprise was that we saw a 50% gain in its AI-related sector. So we're seeing the stock now up by 3%. Trip.com as well, beating expectations, and Barclays saying this is the bright spot in the consumption space in China.
All right, Min Min, thank you so much. Min Min Lo, our China correspondent, giving us an update of these markets. We're doing better. That's, of course, fairly relative, given our starting point from yesterday. Let's bring in Abhishek Vishnoy, our Asia Equity Senior Reporter, for more context on the price action today relative to, of course, what we had a really terrible session, Abhishek, yesterday, going into what happened overnight. And then we're moving up against this wall of an Nvidia earnings report and a September jobs report that could change things, or it could accelerate things even further, Abhishek.
That's right. And, if you look at today's, market action so far, it looks like a state of steadiness. Now, it looks like, positioning ahead of these key high-stake events like Nvidia's earnings and U.S. jobs reports have already happened. People have subscribed to the narrative of AI capex, probably driving lower returns, or is unsustainable, or valuations are in a bubble territory. So that kind of positioning has happened. Now what the market wants is that they're waiting for real data to back their thesis. If that comes in, then, the technical breakdowns that we were talking about yesterday that got a pause today would emerge, and, we'll see, Kospi probably again behaving like a mid-cap stock. Today it's flat, but remember yesterday and before that, 6%, 3% here and there everywhere. Similar is the case with Japan and Taiwan. So, people are waiting for those kind of positions. But, from here, you'd have to start thinking about the next year. And if you look at the trajectory for next year, it looks like, it's probably going to be a decent year for U.S. as well as for Asian assets. So, at the expense of Europe, and rightly so, because the earnings are sort of missing in Europe's picture, U.S. is getting a heads up. We saw Marc Wilson actually talking about a 7,800 target on S&P. And we're getting similar feelers for Asian equities as well. A lot of Asian markets are expected to outperform in the coming year, make a comeback, cut their underperformance, right from the likes of India to China, and maybe even the AI trades. But having said that, it seems like, like the takeaways that have been coming out from Bloomberg New Economy Forum, like Asians buying Asia, a healthy correction coming in, a tactical pause in U.S.-China tensions. These are the themes that even markets are going to replicate, into the year end and possibly into 2027, 2026.
1, 2, 3, 4, 5.
All right, Abhishek, thank you. Abhishek Vishnoy there, our senior Asia equities reporter, joining us there with the latest. And, of course, coming up on the China show, we'll speak with APCO's Greater China chairman, James McGregor, about the business environment in the region. Plus, Marc, DigitalBridge CEO, sharing his insights on powering and scaling AI. We are live at the 2025 New Economy Forum, and this is Bloomberg.
The fundamental problem with the US and China is an almost complete lack of strategic trust. And that means each side has to assume the worst of each other. And even if you're taking precautions, it's viewed as escalatory. Both sides have identified pain points. And I think what you've seen so far is not a strategic realignment or a sudden dawn of strategic trust. Is that both sides have decided they need time, they need a tactical pause whilst you get on with the real business.
Singapore Foreign Affairs Minister Vivian there speaking earlier about ties between China and the U.S., the mistrust that still lies there. Really joining us now to talk more about this is James McGregor, Greater China Chairman at APCO Worldwide. APCO is a global advisory and advocacy firm. James, you were just in China for about a month, I believe, speaking to foreign companies, Chinese companies, policymakers and the like on the ground. What has those conversations been like?
Well, what's missed in the West, I think, is that how China is just steadily moving ahead. You know, it's not perfect. They got some problems, but you know, when people talk about a downturn in China, the next word is collapse. They don't say that about anywhere else in the world.
There's nothing in between.
It's far from collapse. It's moving along. People are adjusting. The companies are powering ahead. China's ahead on technology in EVs, batteries, green energy, peer competitor with quantum, AI. They've taken a whole different model with, I mean, there's countries and companies all over the world adapting Chinese AI models now because they're open source, where the U.S. focused on AGI and kind of winning that battle. It's going in two directions.
And the implications, I guess, several-fold, but implications for foreign companies that are doing business in China that might be missing that headline, that things are developing and moving and thriving very slowly and steadily.
Foreign companies in China know this well, but because of the heavy-duty anti-China politics in the U.S., they are keeping quiet in what they do. They tell me they got to be in China for three reasons. The market. Even if the market is 3%, that's $9 trillion in new economic activity over a decade. The second one is Chinese innovation. Just one example, Huawei is building a 1 million square meter innovation facility in the Qingpu district of Shanghai for 35,000 people. That's just one little corner of innovation. And the third one, they believe their next global competitor is coming out of China because the Chinese companies are very good, and they got to know them so they can compete, or maybe even partner with them to go out.
You mentioned about the whole trade. I'm just wondering in terms of rare earths. What are American companies telling you about rare earths now? Has there been some sort of a growing sense that what was implied in Busan is happening? There is an improvement in these licenses now?
Well, I think for now what you're hearing is that China is delivering and not really messing with the licenses because of the framework deal that was done in Korea. But, you know, look, we taught China how to do export controls. Their export control laws have wording from the U.S. laws. And so we said, we're going to, you know, you can't have our top chips. We're going to slow you down. And China said, okay, you can't have our rare earth. We're going to stop you in your tracks. And so that escalation had to stop, and it did. But it is still sitting there. So, you know, we've got this year framework on trade, which really wasn't much to it other than a ceasefire. And it would hopefully be held together because Trump's going to go to China in the spring. Yeah. She's supposed to go to the U.S. in the fall, and that will hold it together. And the bottom line is China has a huge advantage in this trade negotiations now because Trump really needs a deal. Because he has to prove that the trade war was worth it and that he won. The only way you do that is a China deal. And China will just kind of, they've been waiting it out and figuring out what they can get out of it. And then no matter what's in that deal, it will be advertised as the best deal ever. So they're just kind of working their way through it. Usually you have people working for a year to put together a trade deal, then the principals meet. This time the principals met. Now the next year you got people working together to try to come up with some kind of a trade deal. But the businesses are very happy. They're very happy because it brings down the tone. They can work. And one part of the trade deal that nobody talks about that I think may happen is the president likes big numbers. You have to have big numbers you can tout in a trade deal. The only way you get big numbers, America only has so much to sell to China. So LNG, Boeing's, other stuff. How do you get big numbers? Chinese investment in the U.S. And myself and some others on Capitol Hill have been pushing joint ventures. Let's do what China did in the 90s. Bring Chinese companies in on a joint venture, require technology transfer, and that way the U.S. can catch up on manufacturing and technology we don't have. We'll see if we're humble enough to do this. But I think it's a possibility. This could be somewhat transformative if it goes in a certain direction.
One of the things that emerged from the meeting a couple of weeks ago in Korea was that we'll be here again in 12 months' time. And the cadence of, a one-year increment that will revisit the deal. And is that a hindrance to business planning? How do companies deal with that? A 12-month outlook that seems to be okay, but then we'll see what the settings are looking like in 12 months.
12 months is better than they've had. They've had like 1 week before. It's been changing.
A couple of hours, in fact,
it's been changing so rapidly they couldn't plan. Now that they at least have a bit of a horizon on planning, and they've gotten pretty adaptable. Everybody's got 5 plans sitting there on how they move ahead.
What are tech companies seeing when it comes to the progress on chips? Does the U.S. still lead in terms of innovation? Is that gap still quite wide, or how are you seeing it now?
Yes. The U.S. chips are far advanced, and it's really hard to get there. But China does incremental innovation. Yeah. They will take a certain chip and they'll add different high bandwidth memory and configure it a certain way and make it good enough. We think we can slow them down, but we are basically speeding them up in their innovation and figuring out workarounds as they invest very heavily in trying to become ahead with top chips. Right. Never underestimate China.
Jim, final question for you. The world's gotten used to a lot more Chinese exports this year. Yeah. Is that a reality that persists into next year?
Yes, and it's not good. I mean, China has overcapacity that is, look, the party's slogan would be anything worth doing is worth overdoing. And, when they decide they're going to make cars, everybody makes cars. And so they have all this overcapacity because they've invested so much in it. And now they're sending that overseas. And they redirected, U.S. exports to U.S. are down 20%. That stuff's been sent to other countries. These other countries are not going to put up with that. So China's going to have to figure out a way to bring that down. But local governments keep this overcapacity going because they get a value-added tax. And the value-added tax, it comes out of production of those factories. That's how they're funding the government now because they don't have real estate money.
Jim, thank you so much. We got to leave it there. Let's do this again soon once we have more time. Jim McGregor there, of course, chairman for Greater China at APCO Worldwide. We'll have a lot more coming through here on the ground at NEF. Plenty more ahead. This is The China Show.
Now that's eroding. How much does that weigh on them? How much is that a part of the conversations that you're having?
Well, I think it's definitely an area of concern because, indeed, I mean, for 60 years or 80 years, the markets have been driven by, very certain legal regime. Really based on the independence of the different central banks. So I would say that it is an area of concern, and this translates also very quickly on volatility. I mean, when there had been this debate about Powell, well, you could immediately see, of course, the volatility in the securities business. So I think it's definitely an area of concern. And, gradually, I mean, all these questions about legal regime, about certainty that people had when they were investing, I don't think it is something positive for the financial markets. And that's something with which the politicians have to really realize that you don't play with the trust.
All right, the Bloomberg New Economy Forum is underway. Of course, you're in the Lion City and you're just listening in to this panel. Is de-dollarization for real? That certainly is going to be a key theme.
Is it?
I don't know. Don't ask me.
Yeah.
We're going to go back and dip into that when we hear what the answer is going to be here. But, this is coming at a time where we're waiting for Nvidia earnings. That certainly is, it's almost as big as any sort of macro event right now, right?
It is a macro event.
It is in some ways, just given the weight of this stock. So the direction of the travel in terms of markets could go either way depending on these results. But there is a sense that maybe if they deliver, can they revive this whole optimism around AI once again? And how tall of an order is going to be this time around?
I mean, you almost have a structural disconnect between what a company is able to, so like a company's going to give this is what we report, and they can only give guidance for a year ahead.
And the stock usually falls weeks after.
Yeah, because it's...
Even if they beat.
What can you say? How much can you grow in a year if the market's pricing 5 years ahead?
Yeah.
So it's almost like you're priced for perfection, as we always say here. But it is certainly an ongoing topic, AI and everything in between. The infrastructure, this whole energy push in China that people have started to trade on, right? No power, no AI, as they say. Joining us here in sets, there's probably no better person to help us talk about this. Digital infrastructure firm DigitalBridge has just announced, in fact, the closing of a third fund. We'll talk about that and other things. Joining us here exclusively is the CEO, Marc Ganzi. Very nice to see you in town. Good morning.
Good to see you, David. Good to see you, Yvonne. Thank you for having me. It's a pleasure to be here.
Data centers.
Yes.
Is that still a thing? How big of a thing is that now?
I think it's still a thing. Okay. I think it's going to continue to be a thing. I think, it's interesting for me. I've been building digital infrastructure for 30 years. And, having had the privilege of building digital PCS networks and building the backbone of the internet and now building the foundation for AI, I find this AI trade on and off thing a bit not funny in the sense that, we like to sort of buy on the good news and sell on the potential bad news. And I think we're investing for decades in AI. This is not something that we're going to be investing in the next few quarters. The commitments that our customers are making on a global basis are at massive scale. And so, quarter to quarter, we're looking at obviously the patterns of CapEx spending. Sure. And we've seen no abatement of that CapEx spend. In fact, we've seen an acceleration this year of that CapEx spend. We started the year with about $225 billion of CapEx across the major hyperscalers around the world. And today, that CapEx spend for this year is forecasted to be between $360 and $380 billion in CapEx. So from an infrastructure perspective, we really see an acceleration into what's required to build AI for the next 10 years.
How do you even choose where to invest, whether it's geographies or even kind of what data center? I mean, I'm sure there's a plethora of opportunities out there for you right now. When I look at Asia, though, there's still a lot of underinvestment compared to the likes of EU and the U.S. I mean, how do you sort out those opportunities now?
Yeah, we're really excited about Asia. I mean, particularly Southeast Asia. So we made a commitment to build 300 megawatts here just across the river in Johor. Yeah. I'll travel there this afternoon to go look at our data center there. And, we've committed another $1.6 billion of new capital that we formed with GIC and ADIA a couple weeks ago to invest in Vantage Asia Pac, which we're really excited about. We've been investing in cables. We're building over 9,000 kilometers of dark fiber at Zenith IG. And we've built over 19,000 cell towers between Japan and here in Southeast Asia between J-Tower and EdgePoint. So we're very excited. Digital infrastructure is under-supported here in Asia. And so it's one of the lagging markets in terms of infrastructure, but it's on the front end of technology, which is an interesting juxtaposition. Yeah. So right now we're forming capital. We're here today to talk about, this $11.2 billion of capital that we've raised in our third flagship fund, $7.2 billion in the fund, another $4 billion of stapled co-investment. For us, that's a huge win, and it adds on to the $80 billion of capital that we've raised in the last 12 months to support AI infrastructure. So from an infrastructure perspective, the AI trade is definitely on.
The fact that you raised $80 billion and then raised another $7 billion just goes to show that you almost have to turn money away. When you look at the infrastructure, like, there are gaps everywhere. Yeah. How do you look at energy infrastructure? Because people seem to be talking about it recently, but I'm sure that's not a new thing for you.
Yeah, look, we've got a power bank of about 22 gigawatts around the planet today. We own 11 different data center companies at DigitalBridge. We own over 420 data centers. So we've been in the data center business for over a decade. So this isn't new for us. We really started accumulating power about 2 to 3 years ago. And in fact, we've announced a new strategy at DigitalBridge called Digital Power. Yes. Where we're building grid-independent power. And this is really the key to where power is going in the future, is the ability to work with the grid, work with the regulators, but at the same time introduce other sources of power, bringing that into a microgrid strategy, where in surplus moments of the time we're selling power back into the grid, and then in off-peak, when it's traditionally between 11 p.m. and 6 a.m., we're buying power back from the grid at wholesale. So there's this interesting opportunity to trade in power, provided you can build microgrids and you have access to solar, to BESS, to wind, CCG, LNG. There's no single bullet solution to solving the power for AI. Yeah. And we're working in Europe, we're working here in Southeast Asia, we're working in the United States, and we're going to build over 12 gigawatts of new power in the next 24 months at DigitalBridge. We're investing close to $15 billion in CapEx just to go along with the $80 billion that we're putting into data centers.
You mentioned solar, you mentioned some of these commodities that are very much needed. I mean, China seems to be that market that has all those things. How closely are you looking at that market right now?
Look, for us, China's a difficult place for us to invest. We do own about 7 data centers in Hong Kong through Vantage Asia. We work with the Hong Kong authorities there. We have one of the data center seat licenses. It's a good place for us to allow our U.S. hyperscalers to put infrastructure into China safely and do so with full cooperation from the Chinese government. So, you know, our hope is that over time, we think AI is not a politicalized opportunity. We shouldn't have China versus U.S.
It's like the internet.
It is, because we're going to have AI everywhere, right? We accept the fact that AI is very pervasive. And yes, there are 3 predominant hyperscalers in China. There's 6 in the U.S. But my view is this becomes commoditized. It becomes globalized. And eventually, over time, AI should be without the politics and without the boundaries. So we look as an investment firm, we're investing in data centers all around the world. We're investing in 5 different continents today, and we serve all of the Chinese hyperscalers equally, and we'll continue to serve them.
One interesting thing that's come up is, and I think we were just having this conversation yesterday with Kai-Fu Lee, the model that China has adopted as far as AI goes.
Open source.
Open source. You know, smaller LLMs are not as large LLMs, for example. And I wonder if they pursue that route and the U.S. pursues this route, very general terms, of course, I don't know how to phrase this question properly, is the world going to need the same things that are needed to build the U.S. model when you look at what China's doing and that path they're taking?
Well, look at the adaptation of DeepSeek, right? We use that as sort of a test tube, per se, in adaptation. And what we saw in DeepSeek was this unique moment in time where you saw massive adaptation and you saw costs coming down. And by the way, that has happened in other technological advents, whether it's the 3G radio, 4G radio, or 5G radio, or you look at the adaptation of public cloud. Same thing happened. As we have more adaptation, David, cost comes down, right? And usage goes up. And we see that more pronounced in AI today. And whether you're building a small LLM or you're building a large LLM, it really doesn't matter, because ultimately this is moving to inferencing. And as those models move towards the edge of infrastructure, and as you turn on those inferencing opportunities, remember, most of AI is going to be machine-to-machine connections. It's going to be robotics. And if you think about the future of where AI is going, the use cases are not the same use cases as public cloud. Public cloud was really active applications, right, in the enterprise and in consumer. And you think about where AI is going, you have 5 unique use cases: industrial use cases, enterprise use cases, consumer, which will be less than 10% of AI. Then you think about machine-to-machine connectivity. And then the last thing that nobody talks about is data sovereignty. This is one of the biggest areas of AI innovation. And so I think about these 5 different areas of growth in AI. It's much bigger than public cloud. And so whether you're building an LLM in China or you're building an LLM in the United States or in Norway, ultimately those models are going to be harmonized, to a certain degree weaponized, but ultimately they're going to be turned into specific use cases. Whether it's industrial use cases, enterprise use cases, or consumer use cases, the aperture for AI is widening. It's not narrowing. And I think people need to really be pretty sanguine about the whole AI trade. Look, there's a lot of noise out there. Focus on the signal, not the noise. The signal is that this is a multi-decade opportunity, and that's what we're investing in.
Well, I mean, asset allocators have that question in mind. So, like, a very simple one I have is, there are clearly opportunities in the public markets, right? There's the Nvidias of the world. You talked about cloud, go along on Microsoft. Do people need to rejig and just change the time horizon of these investments? Are we too short-sighted in the public markets, and does that underscore the case for guys like you?
Well, let's take a history lesson, right? Let's go back in time 13 years ago when we started building public cloud. It took the hyperscalers, remember, it took them 6 years to monetize public cloud before there was real demonstrative earnings in public cloud. Here we are, we're in the 3rd year of AI. If you really think about AI infrastructure, we got started in 2021. And we really started accelerating in 22, 23, and now 24 and 25. And so we're 3 years into that journey of building the infrastructure. And we're already monetizing AI. We're monetizing AI 24 months quicker than we monetize public cloud. So investors need to exercise patience. And you need to understand that this is a complete tectonic shift in network topology and most importantly, the applications and the use cases. And so we're gonna see this play out over a long period of time.
Marc, it's great to have you here. Marc Ganzi, there, CEO of DigitalBridge, joining us here at the Bloomberg New Economy Forum. And watch much more ahead as we continue to live coverage here at the NEF Forum. We're speaking live with the CEOs of Fonterra, Nubank, the London Stock Exchange Group, and Hyundai Motor. Those conversations coming your way over the next couple of hours. This is Bloomberg.
And in recent years, Apollo has become an innovator in both insurance and in private.
Welcome back. You're watching the China Show. We're coming to you live here out of Singapore with the Bloomberg New Economy Forum. On stage, of course, as you can see, that's Eric Schatzker with the ongoing panel right now. And just in case you don't know who some of these gentlemen are, of course, on stage, there you go, Mark Rowan, of course, one of them. Yeah, we will take you straight back into this once we have more from this. In the meantime, though, let's just pivot a little bit here. And have a look at the European Union and the top diplomat there and some of the comments coming through out of the bloc there in terms of the deep economic ties to China, holding back its ability, really, to just underscore all these changes taking place here. Let's have a listen.
These sabotage acts that they are organizing on our territories in different countries, these are extremely serious. And I would quote a good friend, Secretary General of NATO, Marc Rutte, who said that why are we saying, hybrid attacks, which seems like, something soft when we should call them by its name, which is state-sponsored terrorism.
One other issue you touched on then, when you were talking about the shadow fleets, was these other countries enabling Russia in some ways. I mean, you've spoken before about China. How concerned are you about China's role in the Russia-Ukraine conflict, and what would you call on Beijing to do? Do you think they're being responsible global actors here?
I would use the wording of NATO that says that Russia, like China, is the key enabler of Russia's war in Ukraine, which means that if they wouldn't support them, then this war would be already over because, all the sanctions, they don't have access to capital, they don't have access to, different things that are under sanctions unless they have, friends who are helping them. What we have been calling, China, who says that they want good relations with the European Union. We have been always raising this, that this is, we have two big concerns. One is their support to Russia in this war, and the second one is their economic coercive practices against our companies. Now, what my feeling is that China is listening to us, taking note that we are raising these issues. But as we are maybe not united how we should react on this, because countries have different relations, then we are not taken seriously enough. And if you take the numbers, regarding China, over 50% of world's chemicals come from China. Critical raw materials. We just saw the weaponization of the access to critical raw materials. Electric batteries, electric vehicles. The list is long. All of the countries, United States, UK, European Union, Australia, Canada, Mexico, India, Japan, South Korea, all struggling with the same issues. Now, the problem is that we are not acting united here. If we would have a economic Article 5 alliance that, if these coercive practices are used against one, then all the others take the front that this is not okay. But and also on the European level, that we are united in this. But, you know, of course, China is quite clever in, you know, divide and conquer type of, you know, relations that, you know, still countries think that we can negotiate better terms. But actually, the honest truth is that we are strong when we are acting together, and then we are also taken seriously. If we say these things, we act as a geopolitical power. If you don't, you know, take steps to mitigate our worries, then we also have a strong response.
That was the EU's top diplomat, Kaja Kallas, there speaking with Bloomberg's Brussels bureau chief, Suzanne Lynch. Let's take it back to, of course, some corporate headlines this morning and watching CATL. So shares, of course, of the battery giant are doing this at the moment as they're down up some 4%, as a 6-month lockup expires today and potentially freeing up the sale of around 78 million shares. And the stock has rallied 92% since its Hong Kong debut and trades at a 20% premium to its mainland listing, giving early investors reason to take profit. Now, some analysts see only short-term volatility, saying CATL's dominance supports long-term growth. China drew record demand for its $4.6 billion Eurobond sale, more than 26 times the offering. The deal follows a highly successful dollar sale earlier this month as Beijing builds sovereign benchmarks for Chinese companies. Global reserve managers, including central banks and sovereign wealth funds, are boosting exposure to China debt for diversification. And Michael Burry says he's still trading even after his hedge fund firm Scion Asset Management deregistered with the SEC. Burry told Bloomberg the fund was essentially a, quote, friends and family vehicle, and that he didn't want the problems he faced during his first Scion run. The high-profile investor says Scion isn't closing, just no longer managing outside money.
Retail investors involved.
All right, we're going to be live here at the Bloomberg New York Economic Forum in Singapore. This panel in terms of building sustainable and resilient financial system that's underway there at the Capella Hotel. You're hearing here Ravi Menon, the ambassador for climate action for Singapore there. He is joined alongside Marc Rowan, the CEO of Apollo Global Management. Let's listen in.
But we have to accept that it has raised the cost of doing business in the public markets. And I'm not sure there's a way out of it because investors still need to be protected. You could do it in a smarter way, and I think that's where most of the reforms need to take place. But having said that, I think what we should think of is that alternative sources of capital are emerging, and we should encourage that. And so the emergence of private equity, private credit, these have been positive, I think. What I think regulators need to make sure is that similar risks are addressed in a similar fashion. The advantage of the private markets are that they don't tap the mass deposit base. And so I think the treatment should be different, but there are risks. And so I think regulators need to come up to speed on what those risks are and address them. And I think for some of the issues that Marc raised, the kinds of long-term investments which require...
All right, we're taking a look at when it comes to China tech here this morning. Shares of Baidu are up. Xiaomi and PDD Holdings, though, the last trade has been lower there. So you take a look at what the earnings are telling us here. PDD slipped into that U.S. session after warning of a slowdown in the Chinese consumer environment. For more, let's bring in our Asia tech correspondent, Annabelle Jewelers. Belle, well, let's start with Baidu. What were the key takeaways?
Yeah, well, you can see there it's really one of the few bright spots in the session today, especially when you've got that broader tech gauge fairly steady. But Baidu, actually, revenue pretty much came in line with what analysts had been expecting, so just north of $32 billion or $31 billion for the September quarter. The bright spot very much was the AI-powered business because you started to see stronger revenue growth coming from that division in particular, actually a jump of 50% on the year to coming in at roughly $10 billion. That does, according to some analysts out there, lay a pretty solid foundation for the longer-term outlook for the business. The concern, of course, for Baidu in particular is always going to come back down to its bread-and-butter division, which is essentially the ad revenue business. And Goldman Sachs, for instance, is among those saying that over the coming quarters, you're going to see sustained pressure on the advertising business in particular. Though, again, coming back to that AI division, that certainly is a bit more optimistic, and you can see that reflected in the share price today.
Yeah, Xiaomi is interesting too, though, right? Because, you know, on one hand, they talk about higher memory chip prices. That's going to weigh on the smartphone business. But the EV business seems to be seeing some bright spots too.
Yeah, it's a bit of a shame, actually, that I think given we've just seen so much strength in the EV business division in particular, and this was one that some analysts actually weren't even expecting to break a profit until the end of this year, but they've managed to do it in the September quarter. But to your point, definitely today, and definitely the reaction from analysts is very much more focused on the memory chip prices and how there's going to be a crunch, a supply crunch in that coming into 2026. That's the expectation we're starting to hear from a range of different businesses, and Xiaomi is saying that's actually going to end up having an impact on their smartphone prices. They're already seeing sort of sluggish revenue or sluggish growth of that division in particular. Apple actually is continuing to sell relatively strongly in the mainland market. They're behind Oppo, for instance, another major smartphone player in China. So smartphones it seems to be a bit of a weaker point, even though, yes, the big takeaway from the EV division was that managing to post a profit for the first time ever. And this is a division that only started selling its first EV last year.
Belle, thank you for wrap up there. Of course, Xiaomi shares down some 3%, as you mentioned, focusing on the negatives here, it seems like. All right, we got a great lineup coming through. We still got plenty more in day one. Here's a glimpse of what day two looks like here at the Bloomberg New Economy Forum in Singapore. That's it for us here in the China Show. Insight with Haslinda Aman is next.